Starbucks is more than a place for Gen Z and millennials to get their daily caffeine fix. Starbucks has revolutionized coffee and made it a cultural phenomenon, a daily ritual for millions around the world. Its green and white logo has become a symbol of high-quality coffee with a unique cafe experience. Despite being around since 1971 and 38,000 locations worldwide, there is still plenty of money to be made for Starbucks investors. Starbucks is selling millions of soft drinks to its core geographical areas in the United States and in China, making up 61% of their locations, proving to be resilient even in challenging economic climates. The company has successfully adapted to its changing consumer preferences and economic conditions. I mean, just look at this gigantic menu that we got over here. No, Starbucks, I'm never allowing you to know my location. Starbucks actually grew its sales this past year by 8% and opened up over 800 stores in 2023 alone. So when people say Starbucks is just a dividend company, let them know this company is very much still a growth company and has no signs of slowing down and is still paying us really fat dividends. The company celebrated its 20th year of the iconic pumpkin spice latte, which is the company's most popular seasonal beverage and has helped make social media posts for basic girls worldwide. In Q4 2023, the company repurchased 3.1 million shares of common stock, valued at over $300 million, bringing total share repurchases in this fiscal year to $1 billion, and they're not even done buying back shares yet. They have approximately 42 million shares available for them to purchase under their current authorization. And that might be something that Starbucks is actually considering, seeing how the stock has not had Wall Street's love in 2023. They're actually down 6% for the year. That considerably trades the S&P 500's plus 23%. Starbucks is now trading below its 200-day moving average of $100. So despite a year where Starbucks generated revenues of $36 billion and a 12% year-over-year increase, raised its dividend, bought back its stock, opened up more stores, gave birth to new basics, had increases in its operating margins to nearly 20% for an industry not exactly known for the highest margins. Despite all this success, Wall Street is not liking Starbucks right now. Some of it could be because the company has a new CEO that just started this year, but many also think it's because of this new labor union called the Starbucks Workers United. Starbucks has been facing increased pressure in recent years for better working conditions, as a small percentage of their stores now belong to a union. Despite its name, the Starbucks Workers United is actually not part of Starbucks, and they actually filed a lawsuit against the union because people were thinking statements put out by the union were actually representative of Starbucks. The Workers Union showed support for Palestine. Yeah, folks, at this point, we can't even grab coffee nowadays without hearing about somebody's politics. And earlier this year, the union complained Starbucks corporate told some stores to take down pride flags at its store, though Starbucks has disputed this claim. It should be noted that Starbucks does not franchise any of its stores. They're all owned by corporate, which means they should be playing by corporate's rules. Either way, the union's latest tweets caused vandalism to some stores, boycotts, innocent employees who had nothing to do with this. They've been shamed, they've been berated by customers, because that's the world where we live in, where if you don't agree with me, you suddenly become Hitler. So one of Starbucks' international websites actually got hijacked, all because people confused this tweet with something the union put out. Of course, the stock market reacts to any and all news, so this is why Starbucks is now at a slight discount. Are people gonna remember a tweet made by some blue-haired SJW union leader 5 years from now? You know, somebody that looks like they could drink coffee from Dutch Bros? Probably not. Starbucks doesn't pay the biggest of dividends, just 2.3%, but it's been increasing its dividends for 13 years now and has a pretty low payout ratio. Its 5-year dividend CAGR is 10.35%. Imagine getting a 10% raise at your job every year. Starbucks has over 31 million loyalty customers. That's up 15% since last year. And loyalty members make up nearly 60% of their sales overall. So if they can keep this core group of users happy with perks and rewards, they're going to keep coming back. With Starbucks' ample menu that's constantly being refreshed based on the season, they will keep coming back. I've been a Starbucks shareholder for over 5 years. I've been holding on to this stock since 2018, with some of my earliest purchases being in the $48 range. I was able to get a tranche going at that low of a price. Some of these are at nearly a 100% gain from today's prices. While I doubt we will see Starbucks at those prices again anytime soon, that's like the Dutch brothers would totally have to invade for that to happen, and God help us all if that does. I'm using this short-term news cycle to gobble up more shares of Starbucks stock. I currently own over $3,000 worth of Starbucks, making up 2% of my portfolio. I'm earning around $75 in dividends every single year for doing absolutely nothing. Remember how I told you Starbucks has a relatively modest yield of 2.2%? Well, those who actually bought shares back in 2018, like me, they now have a ridiculous yield on cost of nearly 5%. This is the true secret of getting rich with dividends that people often overlook. They don't want to be patient. They don't want to pick high quality companies with histories of aggressively raising their dividend. They want that instant dopamine hit. They want that instant gratification of getting rich tomorrow and being left disappointed when they find out that's not how investing works. Picking a stockpile of high quality companies is how I was able to get my $165,000 portfolio as a person that's still in their somewhat mid-20s. Want to see my full portfolio and all my holdings? Check out the link below. I'm somebody who's able to post proof of me beating the market this year, and I post all my weekly trades and stock highlights every single week. A recent stock highlight I went up over 17% the day after I mentioned them. Or join the Dividend Discord. I'm constantly talking about the stock market and giving stock updates in there as well. Did you hear about Costco's latest special dividend? Find out why I don't like the idea of it right here. Hitting that like button really helps out a small-time YouTuber. My videos are always found in podcast form under the Collect Cash podcast name. Let me know if you're buying Starbucks stock at these prices in the comments below, and I'll catch you on the next one.